Microphone check and screen share check, please. Okie doke. Let's see what I got here. Make sure I get the sound right. Isn't that? Try that again, sound check. Yeah, the whole thing just shut off by itself. Do we get the screen back on now? Okay, let's try that again. So I want to give a hat tip to Chun-Long Lee. He's in here tonight. So he sent me a note about systems thinking. Now, I've been a systems thinker since I started a master's degree on that in 1991 at USC, and it was the best thing I ever did for my Army career, among one of them, because I've used it for 30 years. I would say every day, and it helped me formalize the way I had learned to think about systems and processes and organizations, having grown up in a machine shop and a manufacturing plant. And I have included systems thinking in a lot of the courses, and I have been toying with the idea of doing a standalone systems thinking course as part of the Trader's Mind series, where I'm looking at just cognitive skills that I think all traders ought to have, and managers too. So I asked the guys in the Creativity 202 course to think about what they would like to see in an applied systems thinking course for traders, and let the students design the course. And my promise to them was that if they put a little effort into it, then they could have the course for free. And so this was a practical exercise in Creativity 202, which is a paid course, but this gives them the little benefit for taking the plunge and trying on a creativity course that's not directly teaching a system. So Chun-Long went through all the videos that I distributed last night and the day before. Those were videos that I'd done previously on systems thinking and sent over to the Tharp Institute to include in their systems development course, where I had done a lot of systems work for them. Chun-Long looked at all those, and this is what he thought. And I like it so much that I'm going to do what he said. What he said is he would like to see a systems thinking workshop that is how to apply systems thinking in learning trading, because his goal is to learn how to trade. And he doesn't want to become a subject matter expert in systems thinking, which is good, because one of the problems of teaching from expertise is I would consider myself to be an expert in systems thinking because of 30 years of training and application. And so I have a tendency to want to try to teach everything I know about systems thinking, whereas a student might want to say, I need to know about systems thinking as it directly supports my trading. And so by focusing on the customer or the client's student's needs, then I can tailor what it is I want to do. So I respect his point of view. And he just wants to know what is the logic behind a trading rule or a strategy or a system, and not to overload with information. And further, I thought this was important, don't tempt my monkey mind with unnecessary models of systems thinking. A couple that are that come to mind were design thinking and highly reliable organizations. Now, those two elements are what I would think of as systems thinking 202. Those are advanced models and processes that apply to a lot of organizations, and there's actually applications of both of those when it comes to developing new systems and making your organizations robust. But you don't need to know those specifically for learning a trading system. So what I've decided to do is to take the basic concepts and skills from the Waters Center for Systems Thinking, where I'm a certified instructor and curriculum designer, and put the essential elements that managers and leaders need to know in 101. And just say, look, if you're interested in the entry level, then I'll sell that course for $100. And then I'll feel like, okay, I've put it out there, now I don't have to sweat it. Because it hurts my feelings to think that I know something that I haven't told somebody. Then systems thinking 202 would be those things that are more advanced, like highly reliable organizations, the checklist manifesto, design thinking, chaos theory, that you need at higher levels of organizations, but which may not be in direct support of trading. So I'll put those in 202. And then what I can do is do an applied systems thinking course for traders that is geared directly to what Chun-Long wants, which is applied systems thinking for traders. And I thought his list of topics over here were really excellent. And that's going to be the start point of the curriculum that I'm going to build. How to look at the RLCOBB framework as a meta system, the zero state, and the SWOT model. The recent video I sent out that applied SWOT in VUCA is really top shelf. A scaffolding model in which I talk about how to create a scaffolding to give you security and safety and load-bearing members that protect you, and how to do that with self, family, and the environment to set up your trading is key. Checklists and how to add that to our systems. The 37 strategies course that's already part of Foundations is pretty locked in. Logic chains and chain trading in the hybrid course. The idea of the price and value ladder that comes from the multi-time frame, multi-lens analysis is a systematic approach to evaluating opportunities in the market and framing out different segments of a larger meta trade. Mental state control in real time of trading. So there is a system of how to do that, and you can make that system efficient and automatic, and will help you manage stress and be mindful and allow you to preserve the emotional energy that it takes to be trading all day. He likes the way the hybrid trading integrates day swing and core, which is a meta system. And then he mentioned a couple things that he's already learned along the way about hope is not a method, that when faced with choices, pick one and go and then learn from it, and that re-entry is the key to sanity. He's already valuing those at $1 million each. And then almost a collection of the mantras that are part of the tips that would go along with such a course. So what I've asked a couple of the other interns to do, who just successfully produced a home study course for the Thinkorswim platform, is I'm going to build a little prototype and design team to quickly turn Chun-Long's ideas for curriculum into a course. We'll do a once more around the horn and make sure that we've identified the things that would go into 101, 202, and 303, and then prioritize 303 for an applied systems thinking. When we get we'll do a prototype of that course, probably for 10 people at $500. And then when we get that feedback from those folks, we'll turn that into the robust standalone workshop for 1,500. So if you're interested in being on the testing team for that, let me know. I'll get you in at 500. I'll take the first 10. Just send me an email if you're in the sound of my voice. The guys in the creativity course, you're already on the team at 0 because you took the risk in Creativity 202, and that's just an extra benefit for taking that leap. So Systems Thinking 303 is coming soon. I expect we'll have that probably done within the. I'm going to put a target on it of about 3 weeks to get the prototype going. So more to follow on that later. So thanks, Chinlong. Appreciate your due diligence, and I'm really enjoying our collaboration in Creativity 202. I think that's just a winning course. You guys are really making it amazing. The good news is that we've got all of that, all of the true storytelling crosstalk and discussions from the course, guys talking about the highlights and how they're applying those lessons directly into their life and into their trading, is making that amazing. And it will be included as part of the home study course the next time we offer that course. At $3,000 a pop, that 30-week course is worth 10 times as much as we're charging for it. You're going to find that to be true if and when you take that course. So let me encourage you to think about that. Excuse me. All right, let's zoom into, let's see what we got today. Here we go. All right, let's take a look at the market health check and get this thing going. So I'm using the simplified version here. Now we're really noticing that market weakening, so that if we had leg 1 and then a consolidation area, and leg 2, which is the same size as the leg 1 pulse, that thing 2 days ago hit the peak up here at the resistance. It could not get through this gap. It bounced off of that and just rolled over. And now we've got 2 days down in a row and closed weekly. And almost at the spine of the dragon. The short-term momentum is down. PSAR is continuing to march upwards. So we're getting into a test zone right here. It's either got to rebound tomorrow or the day after and then break through this peak in order to keep that move alive for leg 3, or more likely, if it breaks here, it's going to come down, visit the 10-day low and the belly of the dragon, and then probably come test this. And when you look at the gloom and doom from Walmart today and how the market reacted to that, and then warnings about dramatic declines coming in the housing markets, which is where most of the nation's wealth is currently located, that everybody's counting on their homes being their asset, and you get a catastrophic sell-off in the housing market, and now suddenly we're deep into recession, and the administration's not helping by trying to change the rules on recession so they can pretend like everything is okay and that we have a robust economy. That's just absolute lack of leadership and cynical spinning for electoral power. It's shameful. So that makes this a really important critical state right here. First leg up would be to test this, and then if it gets through, off we go. This failure comes out, tests the PSAR. If that doesn't hold, I think it gets to the 10-day low pretty quick. And if that doesn't hold, look out below. So this is going to get tense these next couple days. That's my thought. Take a look at the sectors now. All right, so we have the S&P down 1.18 today. The techs were the by far the worst at minus 2% in the Qs. Emerging markets and diamonds, not quite as bad, but still down 0.75%. The Russell was slightly better at only minus 0.62. And then the only thing above the zero line was Treasuries, basically flat and closed at 117. So that is not healthy. That was weakness everywhere you look. Let's look at the things that underperformed today. Again, here's the S&P at minus 1.2. A cluster of sectors, lumber, oil, commercial real estate, and finance between 1.3 and 1.4. Tech and the other lumber at 1.6 and 2%. The FANGs down large at 2.5. Clean energy and consumer discretionary down 3 and 3.25. This next cluster, marijuana, 4.2, blockchain, Bitcoin, ARC innovation, which had, ARCs had been doing really well, but not so much. ARC down 4.75. Then blended large cap crypto and global future of finance, 5.7 and 7%. Ethereum off 8%. And now the individual targets that really got murdered, a lot of these were those disruptors that had been leading the way upward. Coinbase, 21%, absolute collapse. Squarespace, PayPal, Robinhood, that's your global future of finance right there, just getting murdered. All the speculative money instantly getting slaughtered. So if you're trading those things, you must look at those as tactical trades, and bird in the hand is worth two in the bush. More gloomy to me is Microsoft being off 2.68. So we're starting to see that breakdown in the tech conservative bellwethers. Those, Apple we're going to see was off 0.88, but Microsoft, that's a warning shot across the bow. Devon Energy off 2.1, Rivian 1.5, Cliff Natural Resources, the steel company, 1.33. So that is a fairly wide array of growth and diversification and innovation all getting smashed. Tesla, especially a problem here, minus 3.6. Closing under 800, back down to 776. So the 800 level could not hold, and it cracked. Its intraday R10 is $5. His range stat is still about $50. All right, to the upside, let's see how those look today. Again, there's the S&P, the centerpiece, minus 1.1. So the first cluster of sectors, Mexico, lithium, ARC Genomics, and energy, off between 0.9 and 1.1%. Materials and oil exploration, better, but still suffering, minus 0.7. The defensive plays like Staples, off 0.23. Aussie dollar and Brazil, basically flat. The first actual gainer, real estate, basically flat. Blended commodities, 0.2. Biotech, 0.44. Agriculture, wheat and precious metals, and the VIX, up between 1.2 and 2.4. DBA, which to me is the inflation trade, is still trying to break through 20, which is looks like the important psychological level to me. Meanwhile, the individual companies that did well, the targets, only two, U.S. Steel and Alcoa. So two of the three metals were any good, up 0.5, and 0.4. And they were better than Cliff, which already started to crack. So there's your metals. And then the only other target, Apple, which was down 0.88. So that's not a lot to bet on right there. To me, Brazil, boy, I think the VIX, you gotta be looking strong at that. As a if we're seeing collapse, that's a chance to quickly get on board that one. So watch that as a first sign of weakness in the big broad indexes. Sniper trade of the day. This is Tesla. Let me pump this up a little bit. So I was very active in trading this one. Close to over trading it, which doesn't matter. That's not even a thing. You're just trading it, and you're trading a lot. So here was this was the opening right here, and it broke down and sold off harshly. Let me roll this up a little bit. Yeah. So it moved one risk box, off the top and started failing. So just get short. It had one surge up, couldn't get through the dragon, which acted as a barrier. It sold off a second leg, came up, and now as it was threatening to come through the dragon, I wanted to preserve 1R. So I took that. I took the profit there. It immediately rolled over and then resumed the downward move. So after it came through the dragon and the RL10 started to roll over, I get short here, then stuck around a little too long and gave back a little piece. This could not get through the PSAR. That RL10 rolled over, so as soon as it broke below the collapsing dragon here, I get short again. So that is, so when this rolls over, collapsing dragon, short here, write it down. This is a 1, 2, 3 exit coming through the dragon, testing this. So that's basically, a 0.1 or a 0.2. I then play the continuation, the SSC, looking for this. Standard risk box. I would use the bottom of the RL10, so I'm only risking that much. Like I'm not going to let it go below here, so I'm never going to take a -1 on that. This rolled over. I think I stuck around too long. I think I should have gotten out maybe when it crossed the dragon, but that's about a 0.3 loss. I tried shorting that on the collapsing, like a Kata 2. This would be the collapsing dragon if I had let it get below here, but I wanted to front run it. Immediately got punished when it came out of the dragon. I took that 0.6 loss. So now I took about a 10-minute break in here because I'd had 2 quick losses and a couple fractionals right away, and wanted to see it sort itself out. It sorted itself out naturally to the downside. Let's see if I can get this. Yeah. Next trade. So this is where all is forgiven. Basically a collapsing dragon. Here's the the PSAR flip box. I let it come to be a full collapsing dragon. There's the full up risk. Now this is the one. This is that pattern that we've been talking about, where this little sideways move barely even moves the needle on the RL10. All it did was slow it down a little bit and then immediately resume the failure. So as soon as I get past about 1R on that one in hand, I go ahead and put the second position on, and now I'm watching this like a lazy hawk, and there's a 1, 2, 3 cover. So this one gets about 1. The first position gets 2. So that's about a +3, and all is forgiven. I then get a Kata 2. Like I didn't take the SSC right away because the downward move was so pronounced and the market was starting to collapse. But when it gave me a COTA 2, I took that and collected about half an hour there. Again, when I'm counter trend trading, in this case, meaning that I'm going long in a collapsing market, I am much more inclined to take those partial wins when I can. So that was about half an hour. This was the PSAR flip. This was the COTA 2 to the short side. Basically did nothing, and then Tesla was done. So overall, it took a few trades to get aligned. And it took about 10 minutes to kind of reset my emotions inside here after this kind of chop. I got well started, so I was always in the green, but this just felt like it didn't know what it wanted to do, and that made me feel a little choppy. That's the market being choppy, not me being choppy. So just keep pulling the trigger, get set, and then crush it when it actually works. So I got what I was supposed to get from that today. Okay. We've done the health check. All right, so we're back to the dashboard number 1 now. So we moved back from yesterday. We were in bearish quiet. We've now moved back into bearish normal. So the volatility increased just a little bit today. You can see the 2-day disappointment. This used to be up in here. It's now the 2-day is making this whole thing start to roll over. The risk on is still there in risk Z, but you can see that it's hitting a natural limit around the edge of normal. It would not be unusual for this to sell off, just like it did here, and that was a good short side opportunity. So that's what could be developing right here. Reversal at the normal, natural, expected place. Latin America is warning the dead cat bounce. You will remember the last 2 nights, we had an awful lot of signals in channeling and overreaction warning us about possible shift to the short side, and that's what we've seen the last 2 days. So you've got to look at this not only as a system for trading mechanically, but also as a meta system that gives us information about the general state of the market and the big broad indexes that constitute the world market model. So this is an information tool as well as a trading system for swing traders. Paints, McDonald's, Coke, Walgreens, Pfizer, United Health, those are all those conservative large caps, staples, if you will. Walmart, Tesla, American Express continue to get smashed, along with Verizon and IBM. The losers continue to lose. Dow 30 Tactical. Yeah, there we go. Handful of dojis today. One warning on 3M for the dead cat bounce. Handful of auto framers here. IBM at 7 to 1. Travelers at 4.5 to 1. Strength in McDonald's and 3M. The breakouts, and then a breakdown in Walmart. Big time smash to the downside. That's going to be in play tomorrow and probably drive the mentality and the mood of the market, the S&P and the Dow, for the rest of this week. In the ETFs, just 3 auto framers. Only one breakout to the upside, and that was XLV Healthcare. Handful of dojis. So more of the same. half a dozen auto framers at better than 2-to-1. IBM, AT&T, Walmart, Travelers. That's if they start collapsing again tomorrow, the very fact that they're at the top of this list makes them prime candidates for short side trading. The S&P at about 1.4. This, I would just point out again, this framing data is how you set up the mechanical daily frames if you're swing trading one day at a time. That's in the hybrid course. And the swing trading course, too, for those of you playing along at home. Let's see. Daily squeezes. Some things held up pretty well today with tight ranges. There's U.S. mid caps, small caps, diamonds, real estate, SPY. So the U.S. indexes were not runaway sell-offs today. There were some declines in key elements like Walmart and those techs, but the big broad U.S. indexes were actually relatively low range today for at least one more day. So it was not panic, but it was disappointment, and that's panic is the next step. Shifting into the sniper framework. Newmont Mining remains a remains a Godzilla, an enraged Godzilla. Today was not a big movement. Yesterday was a Six Sigma sell-off, so we were expecting to not be surprised by a large move today. I want to go back and visit Newmont Mining. I got overcome by events with international paper today, so I didn't have time for Newmont. So actually, Newmont Mining, if we go back and look at yesterday's sell-off, here's what happened yesterday. So this is 2 days worth of trading. So yesterday, Newmont Mining had a huge gap down and then had like a 6 Sigma adverse move and then stabilized down here at the close. And so what we suggested was that the way to trade this for today would be to put that tight risk box around this consolidation area. And then if you get the breakout in either direction, to follow that. Well, if you followed that advice, this is what you got. This was the close, and then you had a gap up opening right here of the size of the noise box. So you could have gotten reasonably some entry in here. If you waited for the OR3 to break out, you might have gotten this trade. That would probably have scratched, but there was an opportunity to get a quick hit. The second leg up, the COTA 2, is the one that would have paid off a little bit. But my spider sense is that the big bruising that you saw in Newmont Mining meant that there was really not a lot of follow-through. Like they were not surprised by the repricing. So there was a little bit of a tactical gain in here, maybe 2 opportunities, but very little follow-through. So my spider sense is that this thing is very vulnerable again tomorrow to more sell-off, because this was the absence of buying pressure today. There was no sustained follow-through to offset the massive sell-off from yesterday. So to me, the downside on Newmont Mining is certainly there. And coming back to retest 44 Would not be a surprise at all. So let's be ready for that. Now, interestingly, the Google is also in a both forms of Google are in an enraged 5-day Godzilla, but with a quiet range day here. Let's go take a look at Google and just see what that looks like in the world, if we can. So we should be seeing a large 5-day range and a very small 1-day range. So if we look at the Goog and go to the daily charts, that's exactly what we see. Again, least surprising situation. So this is nice. So you have that harsh sell-off. There's your PSAR flip in leg 1, leg 2, leg 3, and then these alternating legs of nothingness establishes a bottoming practice, and everybody, well, surely this is going to go. Oh, but it doesn't. And now what you actually have is a test right back over here of the collapsing dragons, and which is right at the 150-day low. So you have a very large 5-day range, and then a tightly compressed 1-day range, which now sets up a perfect breakout opportunity. The failure to fail, the tiny little range that was there, says maybe there's not panic reaction, that maybe people think Google is still going to own the world, and that this is really just a buy on dip opportunity. Even if you look at this just as a tactical play, the ability to buy this around, say, 107 with about a $2 risk, even if it just gets back to the triple top, you're looking at a move to 120 from 107. That's plus $13. That's 6-1. You can make a living on short-term swing trading with 6-1 favorable reward to risk ratio in that direction. And then, oh, by the way, this is a critical state. So if the other side falls off the planet there, if it falls off here and breaks below 102, the next target is all the way over here. Yeah, so 102 is in range, and then 94 is in range. So you're talking about from 105 to 94. That's a $10 move on a $2 risk. So we have a 6-1 upside move and a 5-1 downside move on Google. To me, the probability is that folks are going to look at this as a tactical move, and then if it breaks above 120, then the next target is quickly 130, 140, 150, up that price ladder, where it's a return to normalcy and owning the tech overlords. So this is either a rock bottom price on a tactical trade to the upside, or the firewall that's going to prevent this thing from failing much more miserably. And then if that fails, right? So if this price level in here fails, like around 88, now suddenly you start looking at a return to those golden days of yesteryear. So this is really an important price moment. This is a long-term look back. That's 150 days. And this is 30 days. So the fact that we're hovering right there at the key price level, That's what makes this a Godzilla. It's either going to be enraged or it's going to be a big collapse. And then once that momentum starts working, that's a company that everybody managing money has to own at some point. And that may be what you're seeing here is all the weak hands leaving. This was all the guys that had made money on these tactical trades preserving their gains. And now all the guys that are left are the long-term buy and holders that owned it from way back here. And then they're just trying to preserve that little bit. So I look at this as a really interesting moment, and that should be on your short list of things to prepare to trade tomorrow. That's a chance to buy Google at 100 when it was getting up around 150. That's a 33% sale price on, the company that runs the world and knows everything. So Google is pretty important trade location right now. Yeah, nice options trade, my brother would say right there. If you have any interest in options, you should be looking at Danny's options course, which is geared to translate our strategies into his professional options frames. He's a professional money manager for the last 25 years, hedge fund manager. He programmed the TC2000 bundle, and his options course is directly connected to our specific strategies. It's not a generic options course. And that thing's on sale for $1,000 off, and will get you a better deal if you want the TC2000 bundle and the options course. Just contact me. We're going to square you away. I just think those are power tools that you got to have if you're doing options at all. So that's really important. I think there's more room in Newmont Mining. This was a tactical pause, but there was no follow through to the upside. This could collapse very easily the same way Google could. Wheaton Precious Metals is in a Godzilla. This is the most important sniper setup there is, because the only way you get to Godzilla is that after a nice long run up, you get a harsh sell-off that comes back and visits the 150-day low, the 30-day low, the 10-day low, and has abnormal volatility, either abnormally large or abnormally small. So that thing is just cooking and ready to break in either direction large. It's the most important sniper setup there is. And it supports intraday trading, short-term swing trading, long-term swing trading. You've got to master that pattern. That'll be in that systems course for Chinlong. Here's what the life cycle management of that trade can look like. Let me see. Where's the? Is it this one? Yeah. So I want to roll back in time a little bit. For peak. All right. So peak was this healthcare real estate company that was in Godzilla terrain way back here, back at the middle of June. Here we are up here about 5 or 6 weeks later. This was Godzilla territory here for peak and ARE, Alexandria Real Estate, also a healthcare real estate guys. It was a changing of the guard. So they got smashed, leg one, leg two, and we're in Godzilla territory back here. And so we were able to trade this coming out of the doom and depression with the Godzilla, and the Godzilla was to the upside. There was confirmation that it was back when it broke through the PSAR and the PSAR flip. This was starting to decay a little bit, and we were still getting some reasonable trades in here intraday, but we're getting less and less follow through, and kind of the Godzilla energy is running out, and now you can feel this thing just kind of monkeying around and failing back into the chaos. So what Godzilla does is get you well started, and you can make some money in here, and then it's up to this. If this was going to work, it should have gotten up into here. And if it got through there, then it can get up into here. But it didn't do that. It is monkeying around in this and staying locked in this tight trading zone where someday it could become maybe a barbecue or a fence sitter. But the Godzilla feels like it's over. So the optimal time frame for Godzillas is this kind of turning point, confirmed by this point. This little sideways chaos is now starting to look like this intraday. There's just nothing left on it. You're getting some chaotic movement from the opening, and it gapped and sold off and then rolled up, and they're just getting non-directionality. This is the loss of interest by all those people that were the value players that bought it back in Godzilla land and pushed it up to this level. But there's no new buying pressure coming in. Where is it? It's nowhere to be seen because people are not in a hurry. Don't think it's a growth stock. So it's back up to about its fair value, and now it is coming off of my list as a prime target for intraday trading and momentum trading because the Godzilla energy is gone. ARE still has some energy left, as we're going to see in a minute. But I wanted to talk about this as a way to think about multiple time frames and to show how the swing trade patterns can inform the direction of interest in your day trades, but that at some point the power of that first abnormal setup is over, and now this is just kind of becoming normal noise. So that's what I want to say about that. All right, so this was the Tesla. We'll do the sniper stuff. I already walked you through this one in detail. That was the sniper trade of the day in Tesla. Probably about 3 hours. Oh, say this is ARE. This is Alexandria Real Estate. This is Peaks Running Buddy. All right, so we'll take a look at this one now. So here is there's the opening, and it gaps. Here was yesterday's close. It opens here, sells off briefly, and then starts working up the stack. As soon as it clears the opening, makes a new intraday high, and I can put that risk box on it. Why not? Closes here, opens here, starts to fail again. That's almost a risk box off the top. So I'll just capture that all day. Standard practice. And now I know it's in play because it had a nice gap, had an initial energy of, an urge to go higher, and I was able to get a +1 inside here. So this is in play. Caught a 2 re-entry, check or hold. I get a fractional win here. So this is one where the Kata 2 risk box runs up, and then I give it a 1-2 exit. So I capture maybe 1 or a half. Then a second Kata 2, it holds. It holds, it holds. So I try it again with the standard risk box. Still letting it work. There's still some upward pressure in this thing. Nothing, scratch. So that now feels like there's the 3 legs that we talk about. The leg 1 had the most power. Leg 2 started pulling back, and then leg 3 going sideways. So big plus, half a plus, flat. That all looks like leg 1, and it's running out of juice. That's what it feels like. So I can now start thinking about, well, was this the peak? Is that all that there was going to be? Is this vulnerable to running back to yesterday's price level? Yeah, maybe. So I can now start using the rising PSAR to look at this as the tactical trading area in here. Like if this were to fall through the PSAR right now, I would take that as a signal that I could get 1, 2, 3 to the downside, just a return to normal and a failed breakout and then a sharp reversal, especially with the market being as weak as it was today. So now that I've made my little bank in here and I'm directionally neutral, I can start stalking that PSAR, the belly of the dragon. It hasn't come through the dragon yet, but that would be the first sign that, aha, maybe it's setting up for a downside. And then if this, as it's failing, that PSAR is going to start stalling, and wherever this price fails through there, maybe there's a short trade in here somewhere. Check or hold. So I like to think about, 4 to 6 bars ahead of anticipation and plotting different scenarios. What's the scenario if it just goes sideways? What if it breaks out to the upside? What if it breaks down to the downside? Where are the key indicators? So looking forward, I use rules to execute in here, but I'm using vision and what if and creativity to anticipate 3. What happens if it just grinds? What if it breaks out up or breaks down below? Where are those markers? Sideways grinding, that's the first place I could think about the break and then maybe set this up. Standard risk. Failure to follow through is information. But because I had some gains, I wanted to see a little more confirmation yet. Wasn't quite ready on the short side yet. Now what I'm noticing is the least probable thing is what happened. It now is setting up a Z3 pinch on the full RLCO framework, but this is absolute failure to follow. And this is what I was talking about in peak. Peak had no follow-through buying energy. This is like tail end of the Godzilla is just not working. There's just no more buying pressure. So now I can actually set this up as a Z3 pinch kind of a trade where I'm looking at this extremely compressed R10 risk box. Everything is compressed, and now I can say maybe I'm looking for a breakout or a breakdown. Why could I play the breakout? Well, because the first urge was up, and it did not fail. It did not fail. So that's the argument for why this could continue up. What's the argument that it could fail? Well, it had an upward urge, but the market is weak, and it had 2 hours to break out, and it didn't. So if it breaks out of this, maybe it's going to come back and test this bottom range down here. So that's why we like the Z3 pinch. So here's part 2 of ARE. Now, drawn to scale. This is the tail end of that sideways quiet channel that was developing, that Z3 pinch. And I've sized it. So this is that same size standard risk box. The R10 risk box looks like this. And now the PSAR's coming in. The collapsing dragon is in here. So that's about what I'm looking for. It's either this or it's that. Check or hold. PSAR break, I'm in. It now clears the runway. We've got liftoff. This is starting to work a 1, 2, 3. If I hadn't taken this, I would have taken that anyway. So I just take it and hold my nose. And my idea on that is that if this took off right away, but if this didn't take off right away and started failing, I could exit anywhere right about here and still break even on the whole thing. So my stop has to be here when I put that second position on. And now that it moves up one pulse and then gives me this little doji, now what I got to do is take that risk box, which was here. I got to move that risk to about here so that both of these are in the money. This one is probably a scratch and this one makes +1. So when I see that doji, this is the crucial time. What is it going to do? And I've already locked in a no lose plus dinner for 2, check or hold. That's the posture when you surrender to the market. You just say, I'm not predicting, but no matter what you do to me, I'm ready. And now it's just, what's it going to do? Fish or cut bait? Fishes. Now, same thing here. Nothing else in the market was working right about now. And now I've got sort of impulse 1, pause, impulse 2. It did not fail. The PSAR's given me the upside. The RL10 is breaking out. Like it didn't roll over. This is that RL10 that just, and then goes. So I said, why not? Put the third one on, standard risk off the PSAR. Let's see it go. And now I'm really tightening up my stop. Huge sigh of relief. On that one right there, I'm not offended if you just say, you know what, that's enough. Because I got 3 positions on. All 3 are in the money. I'm at +1 on the third position. The second position has 2R in hand. The first entry has about another half an hour. So we're at about +4, maybe +5. Now, by this time in the afternoon, the S&P is starting to crater. So I'm not offended if you take that right there. You could take the range stat and then run that up from the bottom of the day and would be pretty close. So I'm out. I thought about shorting this pig, but there were other things that were failing massively. And rather than short the strongest stock in my stack, I just said, let me just be happy with this, take the money and run. And now if I want to get short, go find a target that is ideal for shorting. And it ain't this. That's had 2 positive legs up. And we're at 1:30 in the afternoon. So my idea was not to short this. And instant regret, right? No, not really. Just you make your bed and you drive on. But other things that were working. International Paper gave me an alert on TC2000. It had a gap down and then sold off another risk box. So it's now 2 risk boxes. That's an R10 and an R10, which means that there's 1, 2, 3, 4, 5 more. That's a range stat move in International Paper because it's already moved 20% of a range stat on the downside, and the market is beginning to get weak. And it's an orderly trader. So here's my risk box, and it moves right away in my favor to here. Now it's already 2R in hand. Happy, happy, joy, joy. This was one of the earliest collapsers. Standard exit, standard re-entry, caught a 2 to the short side. Check or hold. Scratch. This would be a standard SSC. It's had a significant sell-off. A low, a higher low, PSAR flip, standard risk. I could take that. I could say maybe it can just get to the top of the day. Maybe it can close the gap. Maybe if I just take from the high of the day to the low of the day and pick a 50% retracement, now that's a 2R to the 50% retracement, 4R to the high of the day. Check or hold. Knowing that if this fails, I'm going to stop and reverse and play it to the downside because of the size of the first leg. That's what makes this such an interesting trade. Predicting it is stupid. Framing it is smart. And you have a non-directional bias. You do not have a directional bias. You should take a snapshot of that idea right there as a standard play on the SSC will always put you in that position. You know what pattern that looks like on a swing trade? If you were looking, if those were all daily charts, you know what that pattern looks like? The washout swing pattern, the Godzilla in the sniper trade, all of those. $1 gain, PSAR flip, missed the second entry. Cash, stop and reverse, another SSC, scratch, collapsing dragon short, smash. That's going to be in play tomorrow. Look how orderly that is, and I missed the SSC in the last half hour, but so what? Boy, is that going to be interesting. So how am I thinking about trading that one? Put a little tight wrist box on that thing. Carry that into the day. So if it comes out of this thing tomorrow, I'll be short. If it breaks below this, I'm double short. And then this great big move down looks like what it could start triggering, great big move down here. But if this works to the upside, then I can look first target here. There's 1, 2, 3. If that doesn't stop it, 1, 2. And now this is a perfect trade for tomorrow. Is it up? Is it down? I don't know. But I'm ready to trade it in either direction. International paper on a follow-through based on a continuation of today's trade. Hybrid trading right there. Coinbase, huge gap down, along with the entire financial disruptor sector. This is the standard risk box. So it gapped down 1, 2, 3, sold off, gave me a 1, 2, 3 entry. I said, well, I'll try that. Because if this breaks, I'm going to be short in a large way. Quick fail, stop and reverse. All the way into a standard exit. So -1 to get started. And then there's 1 unit of risk. There's my exit. So that's about 1, 2, 3. So +3, -1, net +2 right now so far. Check or hold. Caught a 2, re-entry short. Scratch. Failure to fail is information. So I try the SSC. Scratch. I try the short. Because why not? Micro loss. I flip to the long side. Micro loss. Flip to the short side. Ah. Nice gain. In the afternoon, standard exit into the close. They all look, as my brother says right there, they all look the same leaving the station. You just follow the rules. And you stay alert. And non-directional, you stay in the zero state. So that's the Coinbase. You know it's going to be a large range day. You know there's a good chance that it could be that. We're not predicting, but we're saying odds are improved. The bigger the gap, the larger the follow-through. That's the R10 right there, 50 cents. No, $1. Let's find the boys. My brother worked on Newmont. So that's the one where, again, we saw the tight closing range yesterday. There was the gap up. He gets the range excursion, gets a quick paycheck, gets that second piece, and now it's diminishing. There's just not much left. Now he's ready to hold. He's ready to take some portion of the 2R that was made here, and is holding a swing position short from 46.50. We'll see how that looks. Now he's got to have a much wider risk because he's got an overnight hold, whereas you can have an R10 tight risk box in here. The overnight hold's probably got to be 5 times the size of that to protect you against overnight gaps. All right, Tim. Thank you for your patience, by the way, guys. All right, Tim's back into doing the E-mini, starting here. I like the short. Quick exit, tries the long, quick scratch. I would like to see this short here. He gets it short here, but that's fine. Gets paid. Re-entered short on this one. Got out of there without losing money at least. Now the SSC gets paid. I like the short here. This is a good stop and reverse and gets paid. So he's in the money. There just was not a lot of movement in the overnight market on this thing. My spider sense is that we want to be aware of that downward move of the river and the dragon, and we're still below the RL27 or the VWAP. So we should be we should really be ready on the short side that's trading in the direction of the market's overall trend. So these collapsing dragons and fails, we should be strongly trading on the short side there. You can still trade the counter trend, but trading with that market direction will help. Now, Paul. This is Newmont. He also set that up from yesterday. Now, here was the close. Here was the gap. That was that first move up. He waits for a little more confirmation. And then, after being this much in the money, which is about one R10 box, lets that get to a minus 0.4. So that is, I think that's too much to give back. We should be getting out right here instead of down here, where that PSAR flip is sort of the last place to get out. But this is the argument for the no lose plus dinner for two, or failure to follow through is, it's already starting to test the bottom, the underside of the dragon. The RL10 rolled over, and it crossed the baby dragon right there. So that's your first alert that it's just going sideways. It's not following through. So we should not let that turn into a minus 0.4. Now, this is a good, let's see, what do we got here? Oh, he tried the short here, then took the stop and reverse here. Now, this one is also this much in the win column, and we only get 0.22 out of that. The 1, 2, 3 exit is here, so there might have been a little more squeeze. This is a good short, probably a good scratch. So we might have gotten either break even or something out of that one. Stop believing in the trade. So this is peak, and this is the one that was just chaos galore. This is PEAK. So we might have tried this, but this is a great. Now, where's the entry on this thing? Oh, I see. Oh, yeah. So he's short here. I think this is how I'm reading this correctly. He's short here, gets that much in hand, lets this go negative for minus 0.04, so gave back all of that, slightly, and then stopped in reverse, and then that. Now, if this is supposed to go right away, it rolled over, hit the dragon, crossed the spine, left the dragon, broke the PSAR, and exited here. Can't have that. Got short. So this is believing way too long in this. These things are going to work right away or they don't. Failure to follow through is information, so we got to get out of those sooner. But then Tesla works for him. On the threes, here's the gap down, get short, quick exit. We might have gotten short on this failure right away, or right here. Still, we'll take 5R. You don't got to get them all. That is so good right there. That dragon rolling over and confirming, and he crushes it and then exploits it ruthlessly. And that pays for the whole day. Makes him +3 for the day. Welcome back to Jack. This one is, let's see. Who's this? Okay, Devon Energy on the threes. There's the alert. The RL10 crosses the baby dragon, penetrates the PSAR. We could be short right there with the wrist box right here. He gets this one after it is a full wrist box out, captures one, tries the short on this rollover and failure. That's great. Covers. We could be short as early as this. He does really good getting right there. Second position. Notice he's figured out that RL10, and then the upside doesn't even budget, and it starts to short again, and then he's ruthless on the exit. 3.3 in Devon. Alcoa for 1.5. There's the gap opening. He lets it all resolve. Max favorable excursion gets no lose plus dinner for 2. We could be short right here. No, when this whole thing rolls over, note that little elbow of the dragon right there in the PSAR, that is optimal. So we gave back and we waited an R, and then let that go negative. Instead of being plus 0.5, it's minus 0.5. Great reentry, gets paid. The PSAR flip happens here. On your best day, that's a scratch, so that's a fractional loss. But then the short should be here or here, and then he gets paid. Tries the second one. When it doesn't fail further, he makes sure the second one doesn't lose any money, and then gets paid large on the first one. Notice how the Kata 2 later on works for anybody that was still around. Nice work. Tesla, he crushes for 4.7. Here was the gap down, the sell-off. Then it was really running amok. He keeps no lose plus dinner for 2. Those add up. Then we could actually be short, I think, right in here. When this comes out of the dragon, that's optimal with a standard wrist box like that. But that's pretty good. When we get that much in our favor, let's get paid in here and let's get another 0.36 instead of scratching. Then this is the stop and reverse, or the SSC, which on your best day would scratch, but a fractional loss. But then he nails it on the short. On this collapse right here, notice how that RL10 never really rolls. It just immediately starts failing again. So he pounces and then does a 1, 2, 3 exit for 4.7 in Tesla. Really well done, Jack. Here's Luke with the Aussie dollar, the 5-minute Aussie. This time he times his out of the office better. He at least gets the nice play. Sell off, starts to work, gets the scratch. PSAR flip, that's the optimal. He's right on the optimal. That is great work. This is outside of the Z3. Gives back a full, but he keeps 2. So we'll take 2. Making the first 2 makes all the difference in your mentality for the rest of the day. Less in the this is the 3-minute euro dollar. I like this quick scratch. I'd have been tempted here, and that probably would have scratched. Good reentry. Kata 2 gets paid. Like to have seen this one. Keep working the Kata 2. I think Kata 2 would have worked. Then this becomes the reversal. Gets paid. Quick scratch, gets paid large. 2.1, check, gold star, well done, keep going. Woj, off one in the grind. You got to find the movers, and you have to have some alternative things to trade. So this is your primary, and you got a couple other symbols. When this thing is just grinding, you got to shift to those other ones that you're using just to distract your monkey mind, because look what they're doing. I don't have just a second. Let me open that up for him. Your Devon and Tesla trades paid off today for 4R. So stop paper trading them. When the other one is grinding and these are working, just go for it and shift your attention. You're hitting you got to find the movers. Jack is using that technique of 3 targets that are least correlated, so one of those 3 is going to move. He's looking at Tesla, Devon, and what was the other one? Tesla, Devon, and Alcoa. So a metal, an energy, and a high-tech market leader. So one of those 3 is going to be moving large, at least one of them. So he's able to shift to find the mover and pile on. So I think you're ready for that. And that'll help get you out of, you're trying to make that Aussie dollar work when it's not working, and you're just grinding up wood. All right, that's everything for today. Again, let me know if you're interested in being one of the testers on the systems thinking course when we get done with that at a deeply discounted price. And then you may be interested in that when it comes out in the 1.0 version. So, yeah, Luke, you're on board with that one on the design already because you're in the Creativity 202. And again, so you're already on the design and testing team as a reward for taking that risk. Creativity 202 is the lowest risk course you could ever take, as we are filling that full of goodies. You get to design your own the course you want, and we'll build the course for you. There's so many good ideas coming out of this. Crazy. All right, good work, guys. We shall see you tomorrow.